Thank you. Could I ask you all, please, and perhaps we'll start with Anne Bowden. How do you determine the interest rate to be charged on coronavirus business interruption loans, please?
Okay, each and every loan is individually underwritten. I think our average CBIL loan is about 6%, 6.5%, and the maximum we charge, I think so far, has been about 9.9. But the important thing is that we have to pass on to the customer the benefit of the guarantee. So at average 6 and maximum 9, that's actually quite good value.
Yep, I just think it should be. It's Greg Taylor, Head of Financial Solutions at the accountancy firm MHA McIntyre Hudson, said this is supposed to be saving businesses rather than putting them under. And he also went on, are you really helping somebody at 14%? Have you written any loans at 14%? Starling Bank, Anne?
Yeah, the maximum is 9.9.
Thank you. Perhaps, Paul, could I turn to you? Could you just tell us how you've reached your interest rate decisions on CBILS?
Yeah, of course. Simply, the CBILS average is around 3%, and the maximum cap is 5%. So I guess that sets the framework. From the outset, we were absolutely determined to pass the benefits of the guarantee and the benefits of the Bank of England funding through to the customer, and that's what drove our pricing. So net of the charge for the fee, they're priced to cover the cost of capital. But as I say, the maximum is 5 and the average is 3.
Susan, how did Santander calculate the interest it would charge, please?
Like all of the other banks, we looked at our pre-existing pricing, but we adjusted that significantly to take account of the 80% government guarantee, so that the companies had a lower funding cost. We have a range of different pricing depending on the credit risk, but the pricing was all adjusted to take account of the guarantee.
And what range did you use? What range actually in practice was applied?
To be honest, I'm not responsible for the part of the business that deals with the CBILS loans, so I don't have that information in front of me, I'm afraid. But if it's helpful, we can, of course, provide that separately to the committee post today.
I'd be very interested, please, because I think what we've heard, I used that quote moments ago from MHA McIntyre Hudson. If people were being loaned money at 14%, we'd be very interested to know why people were up at that level. Could I perhaps turn to Amanda? How did HSBC calculate the interest rate, and what range did you settle on?
So in similarity to the other banks, we looked at our existing book. We looked at the value of a government guarantee for 80% and had an intent to pass that on. Where we deviated slightly is we thought that given the nature of the scheme, that having transparency of pricing for customers was imperative. So we priced all our loans up to 3 years at the same price, 3.49%, and all our loans for 3 to 6 years, again at the same price at 3.99%.
Were you partly able to do that because of your scale as a bank, or do you have some sympathy with the other banks not being able to go for that approach?
I really can't opine on the other banks. All of us at the time were trying to do the right thing for our customers. This was the discussion we had in HSBC. We felt the transparency was imperative and there could be confusion and potential negative media reactions such as the article you've quoted, and that's why we took our decision.
Thank you. Mr. Oldfield, how did you price it at Lloyds?
Sorry, yep. So we priced at a maximum of 5%. We expected an average of about 3%. In fact, our average is coming in a bit lower than that, closer to 2.5 just now. The things we took into account in terms of pricing was we said we would break even with our cost of equity plus an allowance for debts, 80% guarantee. Secondly, we would fully pass through the benefit of the Bank of England TFSME's funding. That's worth about 50 basis points. Thirdly, we would reflect the reduction in the risk-weighted assets we hold because of the 80% guarantee. So all that lot taken into account, and a single price was our view to keep it simple. That gets you to those numbers.